Most business owners who successfully exit with a nice check, they just end up playing defense with their capital. Here's how you can shift into income producing assets that you can actually trust. In the next 5 minutes, I'm going to show you how to move from overexposed and uncertainty to clear and confident and earning predictable cash flow without having to rely on Wall Street. Hey, my name is Kent, and when my business started taking off, I used this exact strategy to build a portfolio of real world investments. Investments that generate income, equity growth, and even offer some major tax advantages. And in every video I share, I try to give you one move you can use right now to protect and grow your post exit capital without handing it to a stranger or riding that Wall Street roller coaster. Now, after exiting their businesses, many entrepreneurs are sitting on a nice pile of capital and they're asking what's next. They're cautious and rightfully so. Most of their wealth was tied up in something they controlled, their business. And now it's a windfall in unknown territory. But way too many are defaulting to traditional portfolios, stocks, bonds, and whatever the advisor says. But deep down, they don't trust it. It feels volatile, generic, and detached from how they actually built their success. Because Wall Street doesn't offer grounded, tangible strategies, they're just models and market swings. These entrepreneurs want something practical, safe, and cash flowing, something they understand, and most importantly, something that aligns with their values as an entrepreneur. Because just because they sold their business, it doesn't mean they sold their entrepreneurial spirit too. Here is how I thought through my next moves once my business cash flow started exploding. The first thing you've got to do, you got to zoom out. You got to zoom out and clarify what are your real priorities. And before you jump into that next investment or move, you got to take the time to define what's this money actually for. Maybe it needs to be separated into a few groups. Is it long term income, wealth preservation, strategic growth? See, most mistakes happen when investors get in a rush and they take action without revisiting these priorities and goals, or they blindly follow conventional advice that doesn't match their new reality. Next, as an entrepreneur myself, I determine it's best to focus on alternatives with tangible backing, and not all alternative investments are equal. Many are equity based deals and they look attractive on paper, but the equity is not always backed by tangible assets, especially when interest rates shift. Just ask one of the thousands of investors that are stuck in a 2022 multifamily meltdown deal. One powerful approach is to look at debt based alternatives. These are opportunities that act more like the bank. And in case you haven't noticed, banks make a lot of money. These debt based alternatives are often truly backed by real assets, like real estate or business equipment, and they provide steady, predictable income while keeping your capital secure. Finally, and probably most importantly, don't go it alone. You need to leverage the right expertise. You don't have to hand your money over to a financial advisor or a fund manager, but you should be building your own circle of trusted operators, investors, and mentors. The key is learning how to assess deals, ask the right questions, and understand who's really putting in their own money into the deal. That's what separates smart investors from overwhelmed ones. And there's a reason why I follow this strategy instead of opting for Wall Street or real estate directly. Because approaching investing in this way mirrors exactly how we built our businesses through grounded judgment, real assets, and trusted people. These aren't just swings for the fence, they're secured, structured investments with clear income and real collateral. For example, in my fund, I invest alongside other investors. We're in it together, and not only do we vet investments together to assure they'll perform, but we invest together, which gets us better benefits from the sponsors, such as higher returns or priorities in the capital stack. Now, would you like to explore your own diversification roadmap? Download my portfolio planning guide. It's the first step you can take towards building a post exit strategy that actually aligns with how you think as an entrepreneur. This guide helps you map out exactly where you're overexposed and where the risk in investing are hiding, and how to start shifting into income generating alternatives you can understand and plan ahead for.